And once you know everything that's included, how do you calculate each item? Tonight, we're going to show you how to calculate each item. Like I said, Act Right 101. And tonight, we're going to show you how to calculate each item so you know what's included in your mortgage payment. Once you know what's included, how do you calculate each item? Before calculating your mortgage payment, you got to know these things up front. You got to know the purchase price. You got to know the down payment. You got to know the loan amount. You got to know your amortization schedule. Remember, is it a 30-year fixed loan? When using the mortgage calculator, they typically will say 30-year fixed, but you're going to do a 25, 15, or shorter term. Make sure you know what your amortization schedule. You got to know the interest rate. Tonight, we're going to tell you where to find interest rates without talking to a lender. Sometimes you want to calculate the payment, but you don't want it to be sold. You want to know the homeowner's insurance and hazard insurance formula that underwriters are using to calculate your payment. You got to know the PMI formula, the property tax formula. And of course, you got that HOA again, right? What is the payment? That's the only factor that doesn't have a formula because every HOA is going to be different. There's no actual percentage. But make sure you know all these items when you're trying to come up with your mortgage payment. So let's talk about the purchase price. So you want to go on Zillow, Redfin, Homes.com, or if you're talking to a realtor, look up what the average purchase price is in the area you're looking to purchase in. Without that purchase price, you cannot calculate your mortgage payment. So that's why a lot of you guys reach out to lenders and you tell them, hey, this is what I qualify for. They'll bust out the numbers, but it might not be the home that you want. And a lot of you guys, you go through all this work and your heart's broken. That's why if you learn how to calculate your mortgage payment yourself, when you talk to a lender, you're not setting yourself up for a disappointment or like, man, back to the drawing board. So look up the purchase price. Next thing is your down payment. Without your down payment, you can't figure out what your loan amount is. If you haven't seen our video on down payment yet, go ahead and check it out on our YouTube channel under everything you need to know about down payment, how to use a down payment, and what is a down payment percentage. Remember, when you're saving for your down payment, you're saving by percentage, not dollar amount. You got to meet the minimum down payment requirement. You can increase the down payment if you're chasing a specific mortgage payment, but you got to know the percentage. Of course, if you're going with a VA or USDA loan, it's 100% financing. But your standard down payments are going to be 3% down, 3.5% down, 5, 10, 15, 20. Of course, the greater the down payment, the lower the monthly payment. If you don't know what's your down payment, definitely download our Ultimate Mortgage Guide. Go to whatsamortgage.com and download our Ultimate Mortgage Guide. It will give you the information so you have the confidence to choose your down payment. If you know how to calculate your mortgage payment, you can decide how much you want to bring down. This is how you calculate your loan amount. You need to know your purchase price first. And you got to know your down payment. Without the purchase price and down payment, you can't calculate the loan amount. So for example, here on $500,000, if the down payment is 5% down, that would make the base loan amount $475,000. A lot of mortgage calculators only have base loan amount. You need to know the base loan amount and the complete loan amount. On conventional loan, the base loan amount and the complete loan amount should be the same. So on 5% down of $500,000, that's $25,000. That would make the loan amount $475,000. And let's go with your FHA loan. I see some calculators, they won't even let you put 3.5% down. It's 5% down or 3% down. But if you're going to go with an FHA loan, make sure you know it's the minimal is 3.5% down. So on $500,000 at 3.5% down, it would make the base loan amount $482,500. But remember, with FHA loan, there's a complete loan amount. You got to add the upfront private mortgage insurance. If you're watching this October 2021, right now, FHA rules is the upfront private mortgage insurance is 1.75% of the loan amount, which means it would be $8,443 added back to the $482,000, which would make your complete loan amount $490,943, and that's important to figure out principal and interest. And on a VA loan, typically it's going to be $500,000 if the purchase price. There's no down payment. You got to add back the funding fee. If you're watching this October 2021, the funding fee for a first-time VA buyer is 2.3. But we left the link below right here. If you are not a first-time buyer and you want to figure out what your funding fee is, you can go ahead and check it out on our funding fee chart right here. I left you a link. But 2.3% of $500,000 is $11,500, which would make the complete VA loan amount $511,000. I see a lot of mortgage calculators. They don't have complete loan amounts for FHA and VA, so your numbers are off. There are people out there, and I'm not saying it's bad, but if you're a person out there that you want to know the mortgage payment to the penny, you cannot afford to use a mortgage calculator that doesn't have the complete mortgage payment. So now we know the purchase price. Now we know the down payment. It gives us the loan amount. The next step is interest rates. Say it with me, guys. Interest rate. That's what everyone's looking for. So this was pulled on October 12th, 2021. This is where rates are at. So these interest rates are an average of a 2-day lock which means there's a company called Optimal Blue. I left you a link below. Optimal Blue is like the Google of rate search for mortgage lenders. Big banks upload their rate sheets to Optimal Blue, or they upload it to Loan Sifter for mortgage broker. And Loan Sifter is owned by Optimal Blue. And what they do is they take an average of interest rates locked in the past 48 hours. So on a 30-year fix, the rate's right there, jumbo rates, FHA, VA, USDA, and 15-year. On the site, it'll give you in depth about FICO score, LTV as well. Well, these rates are too high or these rates are too low. They're taking the average lock. If you want to get to the nitty gritty, you got to talk to a lender. Rate sheets aren't just floating around out there. But if you want to know, hey, you know what, let me use this so at least I get a ballpark and punch it in a mortgage calculator, that's where you find interest rates. And here's an example on how to calculate your principal and interest based on the interest rate. So for an example, on a $500,000 home with a 5% interest rate, conventional, there's 5% down, FHA 3.5%, VA 100%. Remember, when you're calculating the principal and interest payment, you need to know the complete loan amount, which not a lot of calculators are accurate about. And you need to know the amortization. When you're using a calculator, what amortization are you putting on there? You're doing a 30-year fix, 25, 20. On a 30-year fix, on this conventional, the payment's $25.49, FHA $26.35, VA $27.45. As we go down from 25-year fix, 20 and 15, you can steadily see, right, the monthly payments going up. So depending on the amortization and the rate, now you have your principal and interest payment. It's based on the complete loan amount. So now that you know how to calculate the complete loan amount, the next factor is your hazard/homeowner's insurance. If you already have an insurance company, you would call them, you would tell them scenario, they would give you a rough estimate on your policy premium. So typically you take the policy premium, you divide it by 12. If you haven't talked to an insurance company, how mortgage underwriters are looking at it, they take the purchase price. They either times it by 0.15 for basic hazard insurance or 0.20 if you're going to get the Ferrari of homeowners insurance, and you divide it by 12. Here's an example. They take the $500,000, that's your purchase price, times it by 0.15 equals $750 divided by 12, that's $6,250. $500,000 times 0.20, if you're going to get the Ferrari version, it's $1,000, that's $83.30. But remember, that covers, besides hazard, that covers any theft, any injury on your property. So remember, that extra $20 could be a game changer. It all depends what's important to you. So now that we know how to calculate the hazard insurance, the next factor is your private mortgage insurance. There's two types. There's FHA and conventional. Let's go over the FHA one. FHA, purchase price $500. On an FHA, if you put less than 5% down, the FHA monthly PMI is 0.85. So you typically take the base loan amount, you times it by 8.5, you divide it by 12. It's the base. Remember, when you're calculating the principal and interest, it's the complete loan amount. But when you're calculating the PMI, it's the base. So it's base loan amount times 0.85 divided by 12. So let's say on that $500,000 home, you go 3.5% down. The loan amount would be $482,500. Times it by 0.85 would be 4,100 divided by 12 is $341 a month. So if you're doing more than 5% down on a FHA loan, the monthly PMI rate is 0.80. So here's an example. 500 grand, 5% down would be 475, 0.80, 3,800 divided by 12, 316. So now we know how to calculate the FHA PMI. It's important that you know that. We're going to show you a second to make your life even a little bit easier. The next one is conventional. So with conventional, it's a little bit trickier. It's based on your down payment. It's either going to be that 3% down at 97%, 95% right there, or 10% down or 15. Then you add your adjustments. Is it a second home, employee relocation, manufactured home, 3-unit or 4-unit, lender paid, right? I wouldn't even look at the lender paid. I would pretty much, when you're using this sheet, it's in our Ultimate Mortgage Guide. It's also on our Techie Lender Calculator, which we'll go over in a second. Then, of course, is your DTI over 45% before you have your PMI. They take that as a risk. You add that risk. If there's 2 borrowers on the loan, the risk gets less. You take an adjustment off the PMI. So for an example, if your loan amount was 477 and after you calculate your adjustments, it's 0.44 is your monthly PMI, it would make the yearly PMI $2,090, which divided by 12, that's $174 a month. So every month, you're going to pay $174 a month until your PMI falls off because it's conventional. Last but not least, your property taxes. So you guys got to know this. It's the purchase price times it by the tax rate divided by 12. Here's an example. On 500,000, if your tax rate in your area is 1%, it's $5,000 divided by 12, 416. But if you're in that state of Texas, you're in a state that does not have state taxes. Typically, property taxes are a lot higher. So 500,000 times by 2.5, that's 12,500. That's $1,041. So if you live in Fontana and your purchase price was 500,000, you pay 416. But if you live in Texas, purchase price 500,000, you would get a better home in Texas than you would in Fontana. But your tax rate is 2.5, you'd pay $1,600 more. But remember, there is no state taxes. If you don't know what the taxes are in that area, unless you're in a state that does not have state taxes, the underwriters at mortgage banks are using 1 1/4. So it's 500,000 times 1 1/4 divided by 12, which would make it 520. So those are the items right there that include your mortgage payment and how to calculate it. And remember the HOA, right? The Homeowners Association. Add that payment, right? So now we taught you how to calculate your principal and interest payment, your hazard insurance, your private mortgage insurance, and your property taxes. Here's some examples for you. All right, here's an advance on a conventional loan. $500,000 purchase, 5% down. It would make the purchase price $500. The loan amount $475, 5% down. The principal and interest $25.49. Hazard insurance, we went with the Ferrari version, $873. Property taxes 1 1/4. Monthly PMI 0.44. It'd be $33.28. Let's look at your FHA. FHA would be the purchase price, the base loan amount, the complete loan amount, principal and interest payment, hazard insurance, property taxes, and PMI, $35.51. Last but not least, our VA. Purchase price, loan amount, complete loan amount, principal and interest payment, hazard insurance, the property taxes, and your payment's $33.49. Now that you know how to calculate your mortgage payment, now it's about the Seesaw game. If you're a loan officer or realtor, or you're trying to figure out to maximize your qualification, you need to know how to calculate your mortgage payment so you know how to control your Seesaw game. Seesaw means if that payment is too high, the only way to lower that payment is to drop the purchase price, bring in a bigger down payment, pay off debt, even though paying off debt doesn't change the mortgage payment, but it gives you cash flow to afford that payment, or add a cosigner. That's why it's so important that you learn how to calculate your mortgage payment, because without that, you can't make the next step. And some of you guys, you're not in a position where you want a lender to run your credit. Am I right? Let me know if you're right. Hey, I'm not in a position to run my credit, but I want to know. That's why I wish they taught us this in high school. My senior year, I wish Act Right 101 was on there, and the topic was mortgage payment, not these electives that didn't further my life or better my life or put me in a position to be successful. So definitely, guys, understand how to calculate mortgage payment. I know sometimes it's boring, but it is useful. Guys, if you do need to get a hold of me, here's a number, 714-790-9697. Give us a call or text us. If you have a loan estimate, you want us to help you read it or beat it, send it to info@whatsamortgage.com. All right, and we'll help you review it. If you just need help reading it, send it over. But if you want us like just beat it, right? Tell us, and we will find someone out there that will beat it for you. All right, guys? Guys, we want to end all our episodes with our attitude is gratitude. Without you, there would be no us. So thank you guys so much, and have a great night.